Okay, if you take a look at these categories of markets which we've talked about, of course, the stock market and the fixed income market. Which one do you think that investors will really, be attracted to between now and June 2023, bearing in mind the yields? We did mention earlier that the stock market pulled a return of 20% for the year 2022. That is exactly at around inflation rate. Or if you take a look, okay, we'll get December just about close to, let's say, 2% above inflation rate that the stock market pulled last year. Talking about the fixed income market also, we've also seen it a bit topsy-turvy. So where do you think that investors will gravitate to this period? Taking off your capital market hat.
Well, we have seen that the yield, or the discount rate on the treasury bill has actually gone down so seriously. It's gone down as low as just a little above 2%. When you have that kind of for instance, for 2020, for January 2023 bills, we are seeing that at above about 2%. And then the maybe 6 months, 9 months bills are just a little above 5%. So when you look at that kind of most investors actually playing that short dated that short end of the market, that short end of the curve. We still see investors who are trying to place it, because most people they are trying to place it, take a very short term position, so that at the end of the day you can take a better decision on what will happen after May 29, 2023. And so we see more investors taking position in that treasury bill market. The bond market, there'll be a bit of caution there, because the moment CBN begins to offload to that market, we are going to see a spike in yield. And so for that reason, most investors in the fixed income space will still want to exercise caution, not to go and hold themselves down on a stock or on a security or on an investment. I mean, they may not be able to realize 100% face value, going forward. So there will still be a bit of caution there. And the equity market, of course, oil and gas is still doing well, and we have seen again, like I mentioned earlier, premium board seems to be pulling the market up. Main board is not yet doing much. But if you look at it, if you look at the entire market, the entire equity market, you see clearly that most of the stocks are just, especially those of them in the main board and also in the premium board, but in the entire market as a whole, we have seen that some stock prices are still below their 1 year high, their 52-week high. So for that reason, we still see a lot of headroom, for stock prices in that area. And so what it means is that we may still see a bullish run that we are witnessing currently in that space, especially for those stocks that are trading below their 1 year high. But a stock that is just going back, that is just coming up with a year low, it will be necessary for investors to also exercise caution there to find out why is this stock trading at a year low when others are moving towards their year high. So these are the kind of thing that will shape decisions among investors generally, both in the fixed income space and the equity market.